let's kick this conversation off with the trading not so common sense rules. And this is the way that I've been trading now for a lot of years. It works. It's not something we're doing for certain sized accounts. It's really a process that you can use for a $10,000 account, a $7,000 account, a $700,000 account, right? And that is number one, trading in a cash account. There's no pattern day trading rule issues. And remember, if you're trading in an account under 25K, you have pattern day trading limitations. And that is no more than 3 trades every 5 business days. That is really limiting. Work around that, go with a cash account, which means rule number 2, which I love, directional debits. I buy calls, I buy puts, and the direction confidence comes from rule number 3, focusing on primarily uptrends. Now, yes, downtrends work too, and there are quite a few of those. We have strategies for both. But right now, there is a lot of strength. There are a number of names on our bullish watch list. That doesn't mean we can't be bears, but I tend to like to buy calls. I tend to like to see the natural float higher of equities be the wind at my back. All right, so a couple other things too, which is really on point for our conversation here. I'm going to share with you some of my favorite sectors and symbols. Watchlist building is 80% of the game, gang. Watchlist building is 80% of trading. What you trade is more important than how you trade it. So let's talk about what we're trading. This is a list of the symbols that I really like, probably the most right now. And where is that? I'm just going to put this here in this empty spot. All right. Uptrends in strong sectors that are on our Sector Secrets Mastery watch list. Staples, gold miners, utilities, telecommunications, and tech. Are these the only sectors that are moving higher? No, but they are some of the strongest. Are these the only stocks that I want to trade? No, but they are the best examples of trends. And of course, a lot of this will change day to day, but this is what we put together yesterday. We have a couple open positions right now. We have Coke. That's an open position. We have Cisco. That's an open position, and I'm definitely looking at more positions in some of these relative outperformers. Coke is also a longer term share buy, so we also do these position trades with a time horizon of 6 months or longer. Coke is part of that, as is Altria. That's another longer term position that we have open, right? So there are a number of things that are working. Staples look fantastic at the moment. And then that kind of brings us to some of the other symbols that I'm looking at. IBM is on the list. You can see there. GDX, I would love to look at GDX itself, XLU itself. And we have a brand new position. This will be the third time we've gotten into gold since the end of January. It is the gift that keeps on giving. I'm also keeping an eye on Roku. Now, one of the other things that makes a lot of sense to talk about, and this was a big part of what I wanted to discuss in Charts and Coffee, and that is the language of consistent account growth. Everything that I'm showing you is based on what is sadly sort of a counterintuitive, never counter trend mindset. We all need a different mindset to trade because the normal inclinations that we tend to have are not necessarily the things that are going to help us grow an account. And sadly, it's a foreign language to traders. So let's go through some of these really important metrics. So first of all, high watermark. In a world where everyone talks about, if you spend even 10 minutes on YouTube, you're going to get all sorts of ads that talk about, out there on the YouTubes, doubling an account or whatever. Gang, it's all about high watermark. If I have a $5,000 account and I'm able to run it up to 10,000, I doubled the account. But if you drive it back down to 5,000 and say, well, I doubled an account 19 times, right? But really, you're stuck in a range. High watermark is really important because we all want consistent account growth. So the idea here is, let's say you even start with a, $500 account, right? You double that, it's 1,000. You double that, it's 2,000. You double that, it's 4,000, right? You double that, it's 8,000. You see where I'm going with this, right? So if you double an account 1, 2, 3, 4, 5 times, really, you should be trading an account value around 16,000. You shouldn't still be here, right? So part of it is just this high watermark. Is the size of my account growing, allowing me to trade more contracts and frankly, even more slightly expensive options? It opens up the door to more opportunity. That's really probably one of the most overlooked aspects of account growth, right? No one wants to stay at a small account. It is a reality for all of us at some stage in our trading career, but we want our small account to be a medium, then a large, and then a Godzilla-sized account. And the only way to do that is discuss average loss versus average gain, right? Not, hey, 100% winner, but oh, wait a minute. On the flip side, most of the losses are 100% losers. You can't grow an account that way. That's the chutes and ladders, right, analogy for trading. Again, not going anywhere to new high watermarks. And any discussion of win rate is completely off mark if the average loss versus the average gain is not discussed. And I'll tell you what happens is most traders might say, hey, it's 20%, 30%, 50%, right? Great, those are great wins. But if every loss is somewhere near the 100%, and even worse, committing the cardinal sin of adding to losers, losers add to losers, gang. Not only is the 100% loss a complete max debit loss, but usually it's going to be larger in size in terms of number of contracts than the winners. Again, completely untenable. And those are two really big concepts. The third is a risk reward ratio. Again, commonly traders will risk, say, 2 or 3 in order to make 1. Again, untenable. Our risk reward ratio is very tenable at a 1-to-1, even better at a 1-to-2. And the idea here is if you have potentially the expectation of a larger reward when the account is growing, right? And I was sharing a metric with the traders in the Sector Secrets Mastery. I said, look, if I were to, for example, take 25 cents or 25% gain on premium, but use 100% max debit risk, what does my win rate have to be to grow the account? It's got to be about 80%. That means for every 10 trades you take, you can only lose twice. That's really a high win rate. But what if I say I'm going to take a 25% risk and a 25% gain? Just a 1-to-1, nothing sexy. What would my win rate have to be to grow the account? So we're talking about both wins, and average losses, right? What would my win rate have to be? It would only have to be about 50%. Just call it 51%. And you can grow an account. Now imagine if it's maybe, now let's say you flip it around and say, okay, I'm going to use the 2-to-1, Raghee. Let's say we're taking 50 cents on the dollar off the table, but we're only risking 25 cents. So that's a 2 reward to 1 risk. What would my win rate have to be? You ready for this? It would only have to be 33%. Amazing. It matters a lot, gang. Average loss size to average win size and your risk reward. Now, do most traders who have a good process win better than 3 out of 10 times? Absolutely. So imagine how much you can grow an account if you're using the right metrics. All right, gang, so that's what I really wanted to cover here today. And I just want to remind everybody, because I'd hate for you to miss it, the cutoff for the Sector Secrets Mastery Immersion is tomorrow, Wednesday. You can get more information over at my.simplertrading.com/immersion. This week, gang, it's the Holy Grail. If you love number crunching like that, you're going to love tomorrow's session. We're going to do the Holy Grail for options tomorrow, Wednesday, and next week we're having this immersion. It's 3 months long. We tackle a topic every week. Next week is going to get into futures trading and understanding position size and risk management. All right, gang. Have a good one. If you have any questions, leave them below in the comments, and I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.